Before we get to our great friend, Charles, stock markets do affect middle America, a lot more than you may think. 60% of stock ownership, actually it's 58%, owned by individuals through IRA, 401ks, pension funds, and so forth. In the late 1980s, it was only 32%, so it's jumped from 32 to 58%. It's a big move. So when we get these stock market corrections, just saying, working folks in middle America are not immune. Anyway, America is really invested in the market. I'm invested in the great, go ahead, Charles Payne, host of Making Money right here on Fabulous Fox Business, who has given us some time. Thank you, Charles. Appreciate it. I mean, I heard some administration people say, don't worry about the stock market. It's not important. It is important. I mean,
it's important. There's no doubt about it. I'm like the Pied Piper. I spent my whole life trying to get people to invest in the stock market, regular folks.
Yes.
I will say, though, that two things. The amount of money retail investors have put into this market on the way down is amazing. Outside of Friday, late selling on Friday, they put in like records amount of money. So they're buying the dip. They've learned over the years that markets come back. So the notion of scaring them that the market must go up every single day or we're all going to fall off a cliff, I think they're over that. It's been hedge funds who have been short this market. And really, the stock market has risen in terms of importance. But if the stock market was more important, let's say, than price of gasoline or food, we would have President Harris right now, not President Trump. Right? Yeah. So there's still things that Main Street America on the ground still care about more than the stock market, particularly short term.
It's not a full bear yet. I mean, we've lived through full bears, 20%. My calculation, 15% from the peaks of mid-February on the Dow, 18% S&P. And even if it is a bear markets, you hate to see it, but they come and go.
They come and go. The last one was like that March 2020 was amazing, right? It was the fastest in history and the shortest in history. And we didn't have anything, right? As it was coming back, every day people are like, how can the market be coming back? We don't have anything. Everyone's going to die. We're shutting down the global economy. And the market knew or sensed that something was going to happen long before it did. So I'm not sure about a V shape, but today I'm telling you, I tell people this is your best down 11 points on the S&P, because those futures this morning, when futures opened, it was crazy. And it's easy to feel calm about this, but a lot of people said crash. A lot of folks were predicting a crash at the open this morning, particularly after some of those global markets opened, and we fended that off so far today. Today, I mean, I think that was pretty impressive.
There's a lot we don't know. We don't know whether stocks will come back. They might. President's going to be negotiating with a whole bunch of countries to fix the unfair tariff problem. I see reputable economists talking about a recession that hasn't happened, an inflation that hasn't happened, a stagflation that hasn't happened. I used to be in that business. There are a lot of things in life that haven't happened yet, Charles. We don't know that. Maybe we ought to all keep our powder dry.
Or just say that, you know what, ultimately we think we'll do the right thing and take advantage of this weakness. But in terms of the assumptions, if I were to assume, I would assume slower economy and that the Fed gets involved. And it's based on history. I heard you and Art talking. I want to say one thing. I know that traditional, or the old school Republican, you never use tariffs, you never do this. There's a lot of things you never really do. Ronald Reagan, those semiconductor tariffs that he had on Japan, they lasted 5 years.
We used voluntary restraint agreements. That's what he used. Those were in
5 years.
I'm not opposed to tariff diplomacy.
Right. And by the way, our market share was less than 10%. They went to 20%. And small semiconductor companies came to life like Intel, which went on to dominate. So, I know he hated using them, but he did use them.
Well, maybe they all hate. Maybe Mr. Trump is right. This is the one time. It's a once historical thing for him to do. Look, his mission is right, and his use of tariff, we have to stop the unfair trading. And I trust him with tariff diplomacy. I do trust him with that.
I
can't wait for him to start working some magic on it.
Listen, the magic starts with that announcement that angered a lot of folks, a lot of purists, and I'm not saying, defending the methodology behind using a trade deficit, but what I will say, it reminds me of the first Trump 1.0. When he came into office the first time, he used the Moab, the mother of all bombs, the biggest, largest, most powerful non-nuclear bomb ever used in the history of mankind. No other president would dare use anything like that. He said, drop it on ice, and bam, the ultimate bunker blaster. I think using this trade deficit is sort of an economic Moab. And so some people see it as heavy-handed, but he's gotten everyone's attention.
You got our attention.
And it's not going to linger. This thing is not going to linger like if you start at 15 and 20 and we meet you in Brussels and then maybe we'll meet in Paris 3 months. No, let's cut to the chase. This is like cut to the chase. Let's cut a deal or live with these crazy draconian numbers.
How about if we cut taxes on the other side also? Huh? I never had any problem with that. Economic Moab. I love that, Charles.
Yeah, thanks.
Charles Payne is the best of the best. You can catch Charles Making Money weekdays at 2 p.m. Eastern right here on Fabulous Fox Business. Thank you, my friend.
Thanks, Larry.